Hi and welcome to the 5th episode in our special budget series of videos. This time it's a very quick one. We're looking at the change to the way incorporation relief is claimed. Incorporation relief is a deferral of capital gains tax when a business is incorporated. For example, when a sole trader transfers their business to a new company where all the assets, excluding cash, are transferred, and the consideration is wholly or partly in the form of shares. It is a special form of holdover relief, deferring any tax charge on a gain, for example on goodwill, until the shares are disposed of. The relief currently applies automatically where the conditions are met. As such, there is no requirement to make a claim via a tax return or in writing. From the 6th of April 2026, the relief must be claimed on a self-assessment tax return. The motivation for the change is not disclosed in the budget documentation. However, there is speculation that it is aimed at businesses where relief would be unlikely to apply, due to the number of fraudulent claims, such as residential letting businesses. Requiring a claim means that the taxpayer flags a potential CGT event to HMRC, which may in turn choose to take a closer look. The announcement affects owners of unincorporated businesses that will be incorporated on or after the 6th of April 2026. This can include sole traders, partners in a partnership, or trustees. Looking at a quick example, James is self-employed. He wants to incorporate to benefit from limited liability and a level of professionalism associated with a company. If James incorporates the business prior to the 6th of April, if all conditions are met, then the relief from CGT applies automatically, and James does not need to make a claim. He will still enter the end date for his self-employment on his self-assessment tax return, and HMRC will be aware of the new company due to the company's house and corporation tax registrations. If James does not incorporate until the next tax year, he will need to claim incorporation relief on his self-assessment return. The claim will be made after the incorporation has taken place, but James may be required to provide information on his tax return to enable HMRC to assess whether the relief is due. This could include listing the assets that have been transferred to the new company and the nature of his business. There is perhaps an opportunity to save some administration time and professional fees by bringing a planned incorporation forward to the current tax year. However, this should not be prioritized over other tax and/or commercial reasons to incorporate on or after the 6th of April.
That concludes the 5th episode of this budget special series. That means we're halfway through, so look out for the second half coming over the remainder of this week. If you are watching on our YouTube channel, don't forget to like and subscribe so you receive notifications of future episodes. Do pop along to our web shop where you can find all of our tax solutions in one place. The link is shown below.